Hello and welcome to Business Incorporated live on Channels Television, where we'll be tracking the markets, the economy, and of course we'll see how all that affects your pocket. Here are the stories that matter to you. India scraps soy meal exports turn to Africa amid rising domestic prices. And Ghana to buy 30% of gold output from large mines to boost reserves and support currency stability. And Ethiopia launches first stock exchange listing as Ethio Telecom makes debut IPO. Great to have you join us. I'm Will Ibang. And as always, let's get a check-in on the commodities space. We'll begin with oil markets. We'll see Brent crude climbing as Iran vowed retaliation against U.S. violation of the ceasefire following the military strikes. Now, natural gas, we see that up 0.48% at $2.92. And we see Brent crude up over 2%, 2.62% at $98.63 a barrel, below that $100 level there. WTI, however, is down 4.53% at $92.26 a barrel. Let's look at the metal space and see if they performed any better. We see all in the green, definitely good bullish sentiments for them. We see spot gold up 0.24%, spot silver also in the green, platinum, palladium, copper also following in that green territory. Let's look at other markets and see if their bullish runs are happening in those spaces as well. We come down to EV, electric vehicles, where we see sales have surged past 20 million units, and this has been led by China and some parts of Europe, while adoption here in Nigeria remains limited. Joining us to discuss this is Toju Megison, analyst at FDC. He joins me right now in Lagos. Toju, it's good to see you. How would you assess the state of the global EV market, and where does Nigeria realistically fit into this transition? Please, could you unmute? Okay, so while we're looking at it, we've seen that lithium prices, you see that has become something that, especially with cheap production going on, lithium prices have been a bit affordable for Africans here. So we see a lot of exports in terms of solar, especially from China. But looking at the market in terms of vehicles now, let's see what that has to do with especially Nigeria, the country where we've seen adoption is low. So Toju, what do you see? How do you assess Nigeria's transition into EV vehicles? How realistic is it for us to adopt this?
Good afternoon, Will. Thanks for having me. Yes, you're right. The global electric vehicle market has been expanding rapidly for a couple of years now. As of 2025, you had seen a total of 20 million units sold worldwide. And come the end of 2026, I expect that to increase to even above 30 million units sold globally. And this is driven by obviously the recent, not the recent, but the rise in fuel costs that we've been experiencing since February, caused by the US and Iran conflict, alongside a fall in global battery costs, as well as policy incentives and stricter emission regulations imposed by governments to make the world a greener place and to be more sustainable.
Okay,
but it's important to note that electric vehicle expansion has an uneven spread across various regions, as more mature markets like in Norway have acquired electric vehicles. The electric vehicles have been accounted for 90% of their total car sales. And when you compare that to emerging markets that are still in their early adoption phase, like Nigeria. So in Nigeria, electric vehicle expansion remains relatively low. And this is due to our weak grid reliability and our lack of adequate power supply across the nation, combined with the limited charging infrastructure that is obviously needed for this to be run progressively and successfully. But notwithstanding, the immediate reaction or the immediate realistic opportunity that for us to explore would not lie with mass private car adoption, but with urban transportation, where bikes, buses, and even taxis would be able to adopt this electric vehicle model faster due to their predictable routes and their accessibility to central charging.
Okay, so rising EV demand right now, lithium is strategic right now, becoming global mineral for that production. And Nigeria, we know, is holding a significant deposits. But how can we position ourselves to benefit from this lithium boom and plug into the global EV value chain?
Yeah, so as you highlighted, Nigeria, we are one of the highest valued, we have one of the highest valued lithium deposits, estimated at $34 billion. As a nation, we have to shift our focus away from raw material exports and move towards value addition. And we can do this by encouraging local benefiction, refining, and also promoting battery material processing within the nation. And this is all done in order for us to extract higher value from our resources. We can also attract foreign direct investments through mining and stable mining policies, clear licensing, and also tax incentives for processing plants. And the government can aid this through value-added chains, by building value-added chains through, again, improving infrastructure and, more importantly, our power infrastructure.
Thank you so much, Toju Magazine analyst with FDC, for sharing your thoughts on Business Incorporated.
Thank you for having me.
And let's move on to other stories now. We've seen India has cancelled about 25,000 metric tons of soy meal export contracts. And this is amid rising domestic prices that have disrupted trade flows. Market sources say the move is the first major cancellation since 2021. At the same time, we say India has turned to Africa for imports, sourcing about 80,000 tons of soybeans from countries including Nigeria, Benin, Niger and Togo. The shift is expected to tighten global soy meal supply further, with South American producers likely to benefit from India's reduced export competitiveness. Next up, we see Ghana will begin buying 30% of gold output from large-scale mining companies starting in June in a move to boost national reserves. The Bank of Ghana says major miners will be required to sell nearly a third of production to the central bank, up from 20% that we saw previously. The policy is aimed at strengthening foreign exchange buffers and supporting currency stability through higher gold accumulation. It also forms part of wider efforts to tighten oversight of the mining sector and increase returns from natural resources. Move on to the bond market. We see Senegal's dollar bonds have come under pressure following the appointment of economist Amadou Al-Aminou Lo as the country's new prime minister. President Bassirou Diomaye Faye named Lo in a government reshuffle, and this is aimed at stabilizing administration and restoring investor confidence amid mounting fiscal challenges. Lo is a former central bank official. Is expected to focus on rebuilding trust with markets and addressing concerns over Senegal's public finances. Development comes as investors react to rising debt levels and uncertainty around the country's fiscal outlook. Finally, Ethiopia has officially opened its capital market with the listing of Ethio Telecom, marking the country's first initial public offering on its new securities exchange. The state-owned telecom giant became the first company to debut on the Ethiopian Securities Exchange, signaling the start of formal equity trading in the country. And the listing is part of broader economic reforms aimed at attracting private investment, deepening financial markets, and expanding access to capital beyond government funding. And let's talking of equities now, we turn to Africa, where we see major equities trading are mostly negative at Intraday. We see Nigeria's NGX is down about 0.2%, 250,000 points, 250,585 points. We see the JSE ASI also in the red, more than 0.5%, 0.54%. Flip down to Egypt, we see them trading also in the red, 0.39%, and we see the NSI in in Kenya, trading Monday's session down 0.45%. And let's look behind the scenes now at the NGX and see what's happening there. We are joined by Oluwatobi Adesanya, equity trader at United Capital Securities Limited. Toby, it's good to have you join us. Toby, the markets opened today in negative notes. ASI is currently trading down about 0.2%. What stocks are driving this performance as we speak?
In the red zone since morning. At first, it was down by about 7 basis points, but now it has declined further. Before we used to, we had stocks like, some insurance stocks, TIP, and now we have seen Fidelity joined that league, as well as Mutual Benefits. In fact, I can say overall the mood is somewhat bearish. Right, even the big names, big banking names like Access, GTCO, they are down marginally. However, but we can point all this to profit-taking activity. But the declines are not that much if you look at it from a broad-based perspective.
Okay, so we're seeing performance across sectors negative. What stocks, especially we see TIP declining, we're seeing other stocks that are on full offer that used to be on full bid. What's happening there, especially with banking? Can you tell us more about what's happening in the banking sector?
In the banking space, I can say, in the market generally, so the market is viewed in terms of phases, right? So if you look at 1 month ago, 2 months ago, so we also rally in the market, generally, and when it comes to dividend anticipation, we also that that fit between Zenith and GTCO, gaining day by day. But I think we have gotten to a phase where the market needs to breathe, to an extent until we see any major policy again or any major move that will start driving stocks generally and also in the banking sector. And one thing that all this also revealed to us is the fact that most stocks fundamentally are now at their support levels. If you look at stocks like GTCO, for the past weeks now, it has been trading around 140, 141. Same with Zenith Bank, it's been around 130, 131. So that just shows that even though we are seeing declines, but it's marginal, sometimes it will gain too. So it just shows that these stocks are fundamentally sound, and even investors are now more aware. And for a stock like TIP, that used to be on full bid, now it's on full offer. So we can attribute that to the fact that they've started allotting the public offer which they raised last year to investors. I think since Monday they started allotting the shares yesterday. And normally, when people bought a public offer as low as 9 naira, and now the stock is around 30 naira plus, people will want to quickly sell. So we can see that is the major reason why we have been seeing the stock now back to full offer.
Well, let's zoom in on the banking. Access Holding is currently topping stocks by volume. See, over 25 million units sold at Intraday. That's a lot of sell pressure. This is coming ahead of their AGM as well. Are investors still unhappy?
For Access Core, it's a stock that almost every investor is eyeing, right? Because if you look at the tier 1 stocks, we could see obviously that it is the stock with the least share price around 25, 24 naira levels compared to tier 1 names like GT, Zenith, which are already above 100 naira. So there's a lot of attention on Access Core, right? And following their results, especially for 2025, we first saw reaction from investors, after the stock crossed 30 naira level. So we saw reaction from investors for the fact that they didn't declare dividend. So now it's back to around 24, 25 naira level. So that might be the new support levels. And in terms of the volumes we are seeing in the stock, so it just shows that even though we are seeing people want to exit, so it's still that the stock has prospects, right? And so most investors are looking beyond the present for Access Core. Like we all know, in the stock markets, it is always good to play the long-term game. And now that it is still the lowest among the tier 1 guys, so it's also an opportunity for investors to take position. And unlike the cross that we've been seeing in the last few weeks, sometimes we'll see 200 million cross, 400 million units cross. But now, even generally, the market is, we have seen volumes and value declined in the market. But we can say Access Core is still attractive to most investors. So there is hope that going forward, they would want to prioritize shareholders' value as well.
Okay, so in one word, Toby, how's the market going to close, green or red?
I would say all things being equal, it is pointing to the right direction. Even yesterday, if not for Airtel Africa, that's came to rescue the markets, and it is stock with a very high capitalization. So, but today, barring any major gain in those large cap stocks, so the market is pointing to the negative direction. And apart from today now, is until Friday that the market will be open again. So we are seeing market activities decline. So the market would most likely close in the red, all things being equal.
A lot of words to explain how the market is going to end today. Just said one word. Thank you so much, Oluwatobi Adesanya, equity trader at United Capital Securities, for joining us on Business Incorporated.
Thank you so much for having me.
Let's see now, major equities in the Gulf region. They were trading mostly higher at intraday on hopes of a U.S.-Iran peace deal. We see Dubai up 1.14%. Abu Dhabi is also up 0.45%. And we see Saudi and the Qatari indexes also trading in the green. Let's look at that very quickly. We see that also up at intraday. So let's move. Except for Qatari index, which was down more than 1%. Let's look at U.S. futures now. See, they rose on Tuesday as traders weighed the prospects of potential U.S.-Iran deal. Is it going to be or it's not going to be? We'll wait and see. Dow Jones, we see that popped nearly 0.54%. S&P 500 with futures up 0.67%. NASDAQ nearly 1% up there. And stocks are making the moves. Biggest moves at pre-market, we see Ferrari, Lear, Intuitive Machines, Micron Technology. Shares of Ferrari, that fell 3% in pre-market after the luxury vehicle maker unveiled its first ever EV. That's electric vehicle. And let's look at South Korea with Asia markets now. That hit a fresh record high today as trading resumed after the public holiday. Investor sentiment supported by hopes of a breakthrough in the U.S.-Iran peace talks. Now see Kospi up 2.55% higher after rising to a record high. Japan's Nikkei 225, that ended the session lower, mostly red for those regions. Very quickly move now to other markets now. Turning to the EU market, we see that a lot is happening there, but Lars is going to be joining me to share what's going on. Lars, what's the picture looking like over there?
Markets actually are a bit off today, showing some weakness, and it's especially interesting looking at the DAX in Frankfurt, because yesterday the DAX saw strong gains. However, it was a holiday, and while markets were technically open, there was really not much action at all. In fact, yesterday saw the lowest trading volume in a long time. So no wonder that the index has to take a breather now as traders are coming back for real. Generally, the DAX is still on its way to a new record high, but who's willing to make a prediction these days when obviously those peace talks that you also just mentioned between the US and Iran obviously decide on whether we can be hopeful for some economic relief in the future or not.
Definitely to be or not to be. But over the past weekend, we saw Pope Leo publish his first encyclica. It's titled Magnifica Humanitas, or Magnific Mankind. I'm trying to use the French word here, but it's focused on the rise of artificial intelligence. Now, given the importance of AI in today's world, Lars, not only Catholics were watching, but also tech firms around the world. What is the Pope saying about AI in his first encyclica?
Yeah, first and foremost, Pope Leo appealed to AI developers and regulators to slow down and reflect on what they're doing. He urged them to use spiritual guidelines to make the choice to work not for their own profit or power, but for the betterment of humanity. The Pope calls for robust regulation, and he criticized the concentration of power and data in the hands of a very few people in the private sector as a danger. He says that, quote, a more moral AI is not enough if that morality is determined by a few. The Pope also calls for the protection and retraining for workers whose jobs are threatened by AI, and for education to help students think critically about this technology. For his event, actually, the Pope was joined by the CEO of AI giant Anthropic, who has in the past himself argued for some moral and ethical guidelines to artificial intelligence.
But why does the Pope bother to talk about a subject like AI at all?
Yeah. On its surface, I guess that's a good question. Religion, after all, is about belief. In the economy, it helps to actually know things. But, at least markets are probably somewhere right in the middle there. You need knowledge and a good bit of belief to make money. But in this particular case, Pope Leo, of course, wasn't talking about investing or so. He was very much interested in the man versus machine aspect of this rise of AI that we've seen over the past couple of years. And he's worried about what AI will do to mankind. And the Pope is not the only one. Tech firms themselves, as much as they've been spending on developing AI, they still haven't figured out how to keep it in check, how to ensure that AI will not lead the world into a future of lies and propaganda and even war and destruction. And it seems there are many in the world of AI that are wondering if the church, as a millennia-old institution based on ethics and morality, if they maybe have a way or an idea of how we should embrace and how we should interact with this latest technology.
It definitely, Laz, it's beginning to look like the movies we watched when we were younger, is taking shape and coming to reality as we speak. But why would the tech firms take advice from the church, if at all they do?
Well, it's not clear, Will, that they will actually take advice, but it's certainly good input for them. And yes, on the one hand, the church, and especially the Catholic Church, hasn't really been quick ever to embrace science. We only have to think back to the days of Galileo Galilei, who was forced by the church to recant his then newly discovered heliocentric worldview. There's also legitimate questions about whether the church could have handled topics like evolution or sexuality in a better way. However, the church has a strong impact on society. And in this case, the Pope is the leader of 1.4 billion Catholics. So that is a large part of the population. And by addressing such a large group, the church has indeed shaped politics and even the economy before, like in 1891, when Leo XIII wrote about social teachings at the dawn of the industrialization. Many of his thoughts were seen as a precursor to today's social market economy. And a little bit later, in 1991, Pope John Paul II wrote an encyclica that some see as a precursor to liberalism, and it talked of open global markets and economic pluralism. So we have seen in the past that the church can shape economic thinking.
Definitely, we hope the church can weigh in on what's happening to the world, especially with the Iran-US war, and possibly we come to an end of that. Thank you so much, Lars, for your input. It's always good to talk to you.
Thank you, Will.
Now let's check in with what's happening in crypto. Well, where we see mixed trading in the oil space, Brent up and WTI down. We see a Bitcoin in the red, very much red today, down 0.5%, 77,054 cents. Investors, there's a risk-off mode right now, not ready to put all their money into this asset as we speak. Ethereum is also down, BNB down, XRP, Solana down, TRX is up, Doge is up. So pockets of red and green there, but we hope that we see a recovery for investors, especially maybe you see more risk on sentiments than that. So let's look at the headlines, things making headlines there. We see crypto investment products that recorded about 1.47 billion in outflows last week, extending a second straight week of withdrawals as Bitcoin funds led the decline according to CoinShares. So we see a lot of reds, a lot of withdrawals from that space. Now, crypto exchange traded products, ETPs, extended the prior week's $1.07 billion in withdrawals. Asset managers, they're saying Bitcoin products accounted for roughly $1.3 billion of the outflows, their largest weekly withdrawal of 2026, while Ether funds that lost about $223 million. Now next, we see EU and Mexico. They've agreed to strengthen cooperation on combating money laundering involving cryptocurrencies and digital assets. Officials from both sides highlighted concerns over the use of digital assets in cross-border illicit financial activities, with criminal networks increasingly exploiting the frictionless nature of cryptocurrency transfers to move funds across jurisdictions. Now, discussions we're seeing centered on improving coordination in identifying and disrupting suspected illicit financial flows linked to organized crime. Finally, the SEC has greenlit Nasdaq's Bitcoin index options, a significant move integrating Wall Street with digital assets. Now, these cash-settled European-style contracts offer U.S. equity traders a new avenue for Bitcoin exposure, distinct from spot ETF options. And while approved by the SEC, final clearance from the Commodity Futures Trading Commission, as CFTC, is pending before trading commences on these index tracking derivatives. And that's what we've got from the Bitcoin and the crypto space. More tomorrow, but that's all on Business Incorporated. I'll see you same time tomorrow. I'm Will Ebong.